Having done justice to your savings in the previous video, future billionaires, I hope, and gathering the necessary skills towards the same, we will now go ahead and invest our savings into our future, which is the real goal of savings. Hello future billionaires. Today's topic is about investing for beginners. Investing can be a daunting task for many, but it's crucial to start building a strong financial foundation for the future. In this video, we'll discuss some of the most popular investment options that beginners can consider, such as stocks, bonds, and mutual funds and so on and on. We'll also talk about the pros and cons of each option to help you make informed decisions. 1. Stocks. Stocks are a type of security that represents ownership in a company. When you purchase stocks, you become a shareholder in that company. As the company performs well, the value of the stock can increase, and you can earn a profit by selling it. Pros. High potential for returns. Stocks are considered a high-risk investment, but they also have high potential for returns. Over the long term, stocks have historically outperformed other asset classes like bonds and cash. Diversification. Investing in stocks allows for diversification, which is essential to reduce investment risk. By investing in different sectors, you can mitigate the risk of a single stock or industry performing poorly. Cons. Volatility. Stocks can be highly volatile, with the stock market experiencing significant fluctuations in a short amount of time. It can be challenging to stomach the ups and downs of the stock market, especially for beginners. Risk. Stocks are considered high-risk investments because there is no guarantee that the company will perform well, and the stock's value can decrease significantly. Example: Apple Inc. AAPL is a popular stock that has performed well over the years. Apple has a strong brand reputation, and the company is constantly innovating, making it a favorite among investors. 2. Bonds. Bonds are a type of fixed-income security that represents a loan to a company or government entity. When you purchase a bond, you are lending money to the issuer, and in return, you receive regular interest payments and the return of your initial investment at maturity. Pros. Fixed income. Bonds provide a fixed income, making them a good option for investors who want a predictable stream of income. Less volatile. Bonds are considered less volatile than stocks, and their values are generally more stable over time. Cons. Lower potential for returns. Bonds typically have a lower potential for returns than stocks, and their returns are limited to the interest payments and the return of your initial investment at maturity. Interest rate risk. Bonds are affected by changes in interest rates. When interest rates rise, bond prices can fall, resulting in a loss for investors. Example: U.S. Treasury bonds are popular bonds that investors can consider. These bonds are backed by the U.S. government and are considered low-risk investments. 3. Mutual funds. A mutual fund is a type of investment vehicle that pools money from multiple investors to purchase a diversified portfolio of stocks, bonds, or other assets. The mutual fund is managed by a professional fund manager who invests the money in various securities based on the fund's investment objectives. Pros. Diversification. Mutual funds provide instant diversification, as they invest in a variety of stocks and bonds, reducing investment risk. Professional management. Mutual funds are managed by professional fund managers, making them a good option for investors who do not have the time or expertise to manage their own portfolio. Cons. Fees. Mutual funds charge fees, which can eat into your investment returns over time. Limited control. As an investor in a mutual fund, you have limited control over the investment decisions made by the fund manager. Example: Vanguard 500 Index Fund is a popular mutual fund that tracks the performance of the S&P 500 index, which is composed of 500 large-cap U.S. stocks. The fund provides instant diversification across different sectors, making it a popular choice among investors. In conclusion, investing is a crucial step towards building long-term wealth. Apart from stocks, bonds, and mutual funds, there are two other popular investment options that beginners can consider: index funds and real estate. 1. Index funds. An index fund is a type of mutual fund or exchange-traded fund, ETF, that tracks a particular stock market index, such as the S&P 500 or the Dow Jones Industrial Average. When you invest in an index fund, you are buying a diversified portfolio of stocks that reflect the performance of the underlying index. Pros. Low fees. Index funds have lower fees than actively managed funds, making them a more cost-effective investment option for beginners. Diversification. Like mutual funds, index funds provide instant diversification, reducing investment risk. Passive management. Index funds are passively managed, meaning that they do not require active decision-making by a fund manager. This can result in lower fees and more stable returns over time. Cons. Limited potential for outperformance. Index funds are designed to track the performance of an index, so they generally do not outperform the market. This can limit the potential for higher returns compared to actively managed funds or individual stocks. Limited control. Like mutual funds, index funds do not provide investors with direct control over the underlying stocks held in the fund. Example: the Vanguard Total Stock Market Index Fund, VTSMX, is a popular index fund that tracks the performance of the entire U.S. stock market. The fund provides instant diversification across different sectors, making it a popular choice among beginner investors. Investing can seem overwhelming, but it's essential to building a strong financial foundation for the future. As a beginner, it's important to carefully analyze each investment option before making any decisions. Stocks, bonds, and mutual funds are all popular options, but they each have their own pros and cons. Remember to do your research, choose investments that align with your goals and risk tolerance, and always seek advice from a financial professional if needed. Thank you for watching, and we hope you found this video informative. If you want us to bring you video on real estate investment, please kindly indicate below. Today, we're excited to announce our upcoming book with the link down here soon, Financial Literacy for Financial Freedom. This book is designed to help you gain the knowledge and skills you need to achieve financial freedom and take control of your finances. In Financial Literacy for Financial Freedom, we cover a wide range of topics related to personal finance, including budgeting, saving, investing, and debt management. We also provide practical tips and strategies for achieving financial goals and building a strong financial foundation for the future. Whether you're a beginner looking to learn the basics of personal finance or a seasoned investor seeking to fine-tune your strategies, Financial Literacy for Financial Freedom has something for you. Our goal is to help readers develop the confidence and knowledge they need to make informed financial decisions and achieve their financial goals. In addition to practical advice, Financial Literacy for Financial Freedom also includes inspiring stories of people who have achieved financial freedom through hard work, determination, and smart financial decisions. These stories serve as a reminder that financial freedom is attainable for anyone who is willing to put in the effort. In conclusion, Financial Literacy for Financial Freedom is an essential resource for anyone seeking to gain control of their finances and achieve financial freedom. With practical advice, inspiring stories, and a wealth of knowledge, this book is the perfect tool for anyone looking to build a strong financial foundation and achieve their financial goals. Thank you for your interest, and we can't wait for you to read it.